The world's greatest geologist is on the verge of his next billion-dollar discovery. With looming shortages in copper, zinc, gold, and silver, this may be the best opportunity hard asset investors have ever faced. Learn more at futuremoneytrends.com/hardassets.
I knew this was coming. There were warnings.
The date the Treasury runs out of funds to operate this banana republic was moved closer a few days to Tuesday, November 3rd. Coincidentally, the same day Social Security checks are supposed to be delivered to citizens. Even Harry Reid admits to a whole handful of U.S. government funding problems right now.
We have debt ceiling. We have Ex-Im Bank, which is going under what's already closed. We have, of course, we've got to do something about funding the government after December 11th. We have IMF that is an embarrassment to our country. We have no money in that. We have lots of things to do, and the debt ceiling is not going to be around forever. We're running out of money. It's going to have to. It will come very soon.
Even though the U.S. still has a 2-week fiat supply, states like Illinois are making drastic cuts, delaying pension payments due to insufficient funds. The payment due was $560 million. Somehow, the U.S. federal government collected a record in taxes for 2015 at $3.25 trillion. The official deficit was still $439 billion. With China dumping U.S. treasuries at a rapid pace, the U.S. may have to make some drastic moves like QE4. Perhaps the reason why Janet Yellen choked in that speech a few weeks ago. Gold and silver are both showing strength, with silver remaining over $16 per ounce by the close this week, and gold at over $11.75, up $20 from $11.55 a week ago. Germany has taken a hopeful move by increasing transparency in that they are listing all its gold bars online for the first time. Their Bundesbank board says half of Germany's near 3,400 tons of gold will be back in Germany by 2020 at the latest. A former Bundesbank official even went as far as to say the reserves could be helpful, for instance, in covering some of the costs if Germany were to leave the single currency. Even though oil is down this week, it is showing signs of a potential turnaround coming from the supply side. The Baker Hughes oil rig count just fell under 600, which is the first time since July 2010 the number has been this low. At this time last year, the rig count was almost 1,600, with over 150% more rigs than today. Though improvements in multiple drilling from single rigs can also be attributed to this declining rig count. The number of natural gas rigs, on the other hand, are only down 41% year over year compared to oil's 63%, with U.S. tight oil capital costs about 7 times that of onshore Saudi oil. How long before companies capitulate under the current illiquid market? We have yet to see a price recovery due to dropping oil rig count. But we have an upcoming OPEC meeting next Wednesday, the 21st, that could shake up the price. 8 non-OPEC nations are invited, including Russia, Mexico, and Brazil. Russia is at odds with Saudi Arabia due to their ties to the U.S. and differing positions on geopolitics in Syria and the greater Middle East. Bitcoin has seen a pretty sharp rally to $263, up $20 or over 8% for the week from $243, where it had been for about 2 weeks. 1 month ago, the price was just under $230, and today's price is a 2-month high. Looking at a 1-year chart, the price now is only 36% down from a 1-year high of $410. Last week, we reported of the new exchange that opened called Gemini, which has seen a near 100% growth every 2 days. Now they're operating with higher volume than the biggest exchange in Canada. U.S. markets are up for the week, with the only bad day being Wednesday. This marks the 3rd straight weekly gain. Walmart's stock fell off a cliff Wednesday, falling 12%. This could be a bigger sign of the broader retail market feeling the pain of the global recession and not the wage increase story touted by mainstream media as the excuse to crash in stock price. But Amazon stock, on the other hand, is up $30, over 5% this week after Walmart's failure. So this is also a sign of alternate business models competing in the new age. Walmart shareholders are feeling the pain with $83 billion in market cap lost this year alone. Amazon is now worth $75 billion, more than Walmart. This week we interviewed Jordan Roy Byrne of the Daily Gold on mining stocks and precious metals, and Future Money Trends talked to Andy Hoffman about the horrible economy and gold-silver price manipulation. Tomorrow we'll release a follow-up interview with Bo Polney, who's had some spot-on forecasts on market moves in the last 3 months. He's predicting a huge 30 to 50% correction in stocks by the end of this year and 70% by next year. Also look for an upcoming documentary from Future Money Trends on China furthering the death of the US dollar and its coming effect on gold.